Hi traders, welcome to today's video. In today's strategy, I am going to show you a very interesting candlestick formation we call the lightsaber. It is a powerful continuation pattern that can also be used at reversal points, but I do find that it has a much higher success rate as a trend continuation pattern. So entries are always found at pullbacks in long-term trends. Let's start with the red lightsaber. When we see the red lightsaber form like this, it must appear after a retracement or consolidation period in a pre-existing downtrend, as I did mention. You can see how powerful this formation is because of the steep drop that happened after it formed. In this example, late buyers are far too weak to continue creating buy pressure and the bears overpower them with ease. This gives us the long wick with the body of the candle being about 1/4 the size of the wick. You can see how it resembles a lightsaber with the wick being the blade and the body representing the handle. The green lightsaber is actually exactly the same as the red lightsaber. Of course, the only thing that we have to do now is just invert our rules. In this example, we have a clear determined uptrend, which I'm using the anchored VWAP to identify. If you haven't watched one of our previous videos, I explain in depth exactly how the anchored VWAP works and how to plot it correctly. If I zoom into the green lightsaber, you can see how it sticks out and how we have such a strong continuation after that. The few things that we needed to mark off before identifying this green lightsaber was A, we needed a predetermined uptrend, which we have. We needed a retracement or consolidation period before the green lightsaber formed, which we also have. And then the wick of the candle is at least 3 times the size of the body. Stop losses and profit targets can vary when trading the lightsabers because we use them primarily as indications that the end of the retracement is in. However, we can create some lenient rules to apply when managing risk on this formation. Our stop losses can be placed below the low of our green lightsaber. We can either use a trailing stop loss based on how many points the market moves to the upside, or we can simply just leave it until our target is hit or a trend reversal occurs. For targets, a good starting point would be around the most recent swing high, or we could scalp the lightsaber too and look for a 1-to-1 risk-reward ratio. Ultimately, it comes down to your own trading style. Here are the very important characteristics of the green and the red lightsaber candlestick formation. For red lightsabers, we are only taking short entries. We have the wick of the candle pointing upward, is found after a pullback and an established downtrend, and the immediate candle that forms after the lightsaber must be red. For the green lightsaber, we are only taking long entries. It has the wick of the candle pointing downward, is found after a pullback in an established uptrend, and the immediate candle that forms after the lightsaber must be green. We can see here that there have been higher highs formed all the way going upwards, higher lows as well, and this is telling me that we're in an uptrend, so I'm only going to be looking for green lightsabers. And I did identify a very strong one over here. This is a 5-minute chart, by the way. Let me zoom right in for us. And a couple of the characteristics again that we must look for is the body of the candle is 1/3 the size of the entire candlestick formation, and we have a very strong wick to the downside. This wick again is just telling us that the sellers actually tried to push this price down, maybe overextended themselves a little bit, and the buyers stepped back in, forming a very strong rejection to the downside. Before our green lightsaber actually formed, we also see a retracement, which is giving us double confirmation that this is a good one to follow. The entry goes like this. We just wait for a break above the high of our green lightsaber. Again, the best way to actually take this entry is to use a stop limit or a stop market order. Most of the time, a stop limit order is going to be fine because when it does break that high, it's not a significant level where you may see the market push right through and you have the risk of not getting filled. Now with the next candle that we form, we see that it actually did retrace a little bit into our green lightsaber. There's nothing to worry about if that happens, but we do want to see that candlestick form green. In this example, if that next candlestick actually did not form green and formed red, I would most likely just exit the position, because with the green lightsabers and the red lightsabers, we want to see the price move with us extremely quickly. If you keep the rules and the characteristics of the lightsabers in mind, I'm sure that it will be a very strong addition to your trading plan. Let's take a look now at the red lightsaber. We've discussed the green lightsaber and I've showed you how we can trade it. I'm going to focus a little bit more now on when we want to identify or how we identify if we need to look for red or green lightsabers. Remember, we just need to identify what the long-term trend is. If we're trading it as a reversal pattern, it's not going to work as well as if we use it as a continuation, which I will explain in a few moments. Firstly, I've got two indicators up right now. 200 exponential moving average and an anchored VWAP. Very easy to identify what the trend is just by looking at it, but this is in case you want to use something that has more defined rules. Now, both indicators are showing us that we're in a downtrend. I'm just going to take it from there and I'm going to look only for red lightsabers now. I identified one down here, and before I even get into the pattern, I want to explain to you exactly what this candlestick formation is telling us about the current market condition. Because I find that a lot of tutorials and information out there is explaining to us what these candlesticks are, how to trade them, but there's no theory behind them and doesn't give us an understanding exactly of what's going on in the market for this candlestick to actually form. With this candlestick, the first thing that of course we've identified is we're in a downtrend. Okay, so the pressure is to the downside. This is simply just meaning that there's more sellers in the market than buyers. Now, when we see a candlestick formation like this form, what it's telling us is that the buyers that have been basically liquidating their positions from being short this initial move are getting over exhausted now. That's why we see initially price move all the way to the top and then reject to the downside. We sometimes forget when we look at candlestick formations that price was actually at some point trading all the way up here. Now imagine if price was trading at that point. This is enticing a lot of fresh buyers to actually get in that market. Now, people that have actually missed this opportunity to short this overall trend that we've identified may look at this as an opportunity. A lot of institutions and big investors will be looking at this as an opportunity to actually short it again. This is why we see that extremely strong reversal. So any bulls that bought this wick and got kind of enticed into buying this fake breakout have now been almost liquidated instantly. And that's why after a red lightsaber forms, especially the red lightsabers, because we know in markets that a lot of the time drops happen a lot quicker and a lot more violently than the up moves. And that's why we see that two candlesticks after that we have a very, very steep sell-off. With the lightsabers, we must realize that the idea behind them is that these are exhaustion zones which we can use to enter into the market, and it's not really our plan to gain an advantage of, say, the market is just going to continue moving extremely quickly in our direction. We may see some lightsabers form where we do get that and the price actually forms a lower low, which would be below this line. Sometimes we don't see that happen and we just see the first couple candles form and then a bit of a consolidation period, and then it begins to move sideways. So in terms of exits, it's completely up to you and down to your own risk preference. This is just one example of the many strategies you can use at OneUp Trader. In fact, there are no restrictions on how you can trade with us. If you have what it takes, then you can be fully funded within 15 days after signing up. Look through the various testimonials, trader interviews, and funded trader withdrawals on our YouTube channel. You can find everything you need on our FAQ section, and you can speak to our support team, which is available 24/7. Track your trading performance using our advanced account analytics feature. Discuss trading ideas with other traders on the members area and Discord trading room too. Don't risk your own capital in the markets. Rather, prove your trading ability with OneUp Trader and enjoy a risk-free funded trading account. Click the link below or go to oneuptrader.com to find out more.